Trading has never been easier thanks to a game-changing secret TradingView indicator. After analyzing the charts, this cutting-edge tool offers the most profitable trading options, making it perfect for traders of all experience levels. By the end of this video, you'll have all the knowledge you need to become a successful trader. Now let's dive into the video. First, open a new tab on TradingView and select any chart from the available options. Then click on the Indicators tab and search for the Higher High Lower Low strategy. This powerful script identifies pivot highs and lows, calculates higher highs and lower lows, and even determines support and resistance levels. Now that the higher high lower low indicator is added to your chart, we'll need to make some adjustments to optimize its functionality. Click the gear icon next to the indicator's name to access the settings. In the Inputs tab, follow these steps. Change the left bars to 9. Then adjust the right bars to 9. After that, modify the support and resistance settings based on your trading style. Next, navigate to the Style tab. To declutter your chart and improve readability, disable the higher low, higher high, lower low, and lower high label options. By customizing these settings, you'll enhance the HHLL indicator's performance and create a cleaner and more streamlined chart that better suits your trading needs. But the higher high lower low indicator adjusted to your preferences, you'll notice white and red dots on the chart. These dots represent crucial resistance and support levels respectively. And this strategy, when the price candle breaks above white dots, it signals a potential buy opportunity as the market has breached a resistance level and may continue its upward momentum. Conversely, if the price candle dives below the red dots, it serves as a sell signal, indicating that the market has broken through its support level and could potentially continue in downward trend. To ensure our strategy remains effective, it's essential to address potential false breakouts that may occur against the market trend. But before we dive into that, a quick reminder, TradeGenius is committed to providing you with powerful trading strategies using free indicators. Our goal is to create opportunities for everyone to thrive in the trading world without breaking the bank. If you find value in our approach, show your support by liking this video and subscribing to our channel for more valuable trading insights. Now let's focus on resolving the issue of false breakouts. We'll be incorporating a second indicator into our strategy, the 920, 50, 200 EMAs. This reliable free indicator is available on TradingView. To add this to your chart, navigate to the Indicators section of TradingView, search for 9, 20, 50, 200 EMAs. And selected in the results, click on the indicator to add it to your strategy. The second indicator will help you confirm the strength of market trends and validate the signal generated by the higher high lower low indicator. And before we proceed, let's make a simple adjustment to the indicator settings. Click on the gear icon, locate to the Inputs tab, and change the third length value to 100. Next, go to the Style tab, disable the Entry EMA and Fast EMA options, and enhance the visibility of the Medium EMA and Slow EMA lines for easier monitoring. Now let's define an uptrend and a downtrend using this indicator. For an uptrend, the EMA 100 line should be above the EMA 200 line, suggesting upward momentum. Additionally, the price action must remain above both EMA 100 and EMA 200 lines to confirm that the trend is a strength. Conversely, for a downtrend, the EMA 100 line should be below the EMA 200 line, indicating downward momentum. Furthermore, the price action must stay below both the EMAs. In addition to identifying uptrends and downtrends, it's essential to recognize periods of market consolidations. When the EMA 100 and the EMA 200 lines are intertwined or moving close together, it signals that the market is in a state of indecision or equilibrium, often referred to as a consolidation phase opportunities. By integrating these two powerful indicators, we'll create a solid strategy that better identifies authentic breakouts and align with the overall market trend. Here are the buy trade rules. Firstly, look for a bullish breakout from a resistance level, indicating by the price action crossing above white dots on the higher high lower low indicator. Next, confirm that the trend is upward, ensuring the EMA 100 line is above the EMA 200 line and the price action remains above both EMA lines. And once these conditions are met, confidently enter a long trade. After entering the trade, here's how to set your stop loss and target. Set the stop loss below the most recent swing low to protect against adverse market movement. And to set the take profit, aim for a target that is 1.5 times greater than the risk of your trade, maintaining a healthy risk-reward ratio. And now let's delve into the sell trade rules using our two indicators, which together form a reliable strategy for identifying genuine breakouts while keeping you aligned with the prevailing market trend. To initiate a sell trade, first be on the lookout for a bearish breakout from a support level, signaled by the price action crossing below red dots on the higher high lower low indicator. Secondly, ensure that the market trend is indeed downward. Confirm this by checking that the EMA 100 line is below the EMA 200 line and the price action is situated below both EMA lines. And once these conditions are met, enter a short trade with confidence. Following your trade entry, set your stop loss and target levels as follows. Position your stop loss at the most recent swing high and establish a target that is 1.5 times greater than the trade risk. And to further enhance your trading skills and transform potential losses into profitable opportunities, don't forget to watch our recommended video on the screen. Happy trading!